Good morning. I'm Joe Brusuela, Senior Economist at Bloomberg LP with your Bloomberg Economic Brief Morning Cup of Joe. This morning we've got earnings in the economy in focus. Before the bell this morning we're going to see earnings from 3M, AT&T, United Technologies, and U.S. Steel. And then after the bell we've got that all-important bellwether, Apple. Now it's interesting, we've got a little bit of a coincidence today that the Apple earnings are scheduled to be released after the bell, the day before an FOMC meeting that is quite critical with respect to market expectations and investor sentiment. Thus, I would expect if Apple's got some good numbers coming, they may want to drop that release earlier in the day to maximize its impact, so look for that. Now, with respect to the economy, we've got housing and consumer confidence data on tap today. We're going to see that Case-Shiller index at 9 a.m. Now remember, that's released with a 2-month lag, so what we're going to see is we're going to see price deterioration year over year at a slower pace, and we're likely to see a slight increase in prices month over month. But remember, this data is lag, and it's done on a 3-month rolling average, so it's going to reflect the slightly better price environment we saw later in this year as it turned into January. Now my sense is what we're going to see later on at 10 a.m. when we see the new homes data is that we saw a slight exaggeration in the true underlying strength or condition of the housing market. And when we get to that new homes data at 10 o'clock, many economists have based a forecast of an increase of 1.6% on the month, based simply on a slight improvement in mortgage purchase applications. But if you take a look at the NAHB index and foot traffic, you saw no change. And in fact, we've already got the April data for that series, which have showed a decline in overall foot traffic in the NAHB index. So it would not be of any surprise if we see another disappointment in terms of overall sales of new homes. And again, you're going to get that at 10 a.m. this morning. Now, also at 10 a.m., we're going to get the consumer confidence data. The consumer confidence data is highly sensitive to movements in the labor market. We've seen an increase in jobless claims and a slight pickup in the pace of firings, so it would not be a surprise to see another downside or disappointment in consumer sentiment data. You also want to take a look at the labor differential, or jobs plentiful minus jobs hard to get, which will give us our first forward look at the April unemployment environment. I'm also going to be looking at 6 months, looking at sentiment 6 months ahead to see if consumers continue to express an interest in purchasing more durable goods and continuing to ramp up spending even though their income is not keeping pace with inflation. I'm Joe Brusuela. This has been your Bloomberg Economic Brief Morning Cup of Joe.